Hey, Dustin,
Hello, hello. We meet again.
we meet again. We have a lot to cover. Earnings season has officially kicked off. We got Microsoft, Meta, and Google reporting on the tech side. Plus, we have who else? We have Mercado Libre Meli is who? Mercado Libre, right? Yeah, Mercado Libre,
Oh yeah, the side
Starbucks,
chain.
Chipotle. So we got a bunch of companies reporting after close, which we just closed, so they should be reporting any minute. But while we're waiting for these companies to report, what else are we going to be talking about?
Well, a big announcement happened yesterday with OpenAI officially becoming a for-profit company. So I
Yep.
think we could jump right into
Has,
that.
yeah, everyone has known that's coming.
Yep.
What are your thoughts about that?
So my POV on the situation is I really could care less about what happens with OpenAI. I care more about the precedent that it sets for the industry.
Right.
Um, which I think is maybe a little too early to tell.
The
Um,
industry being the nonprofit industry. Which industry are you?
uh, I I don't technically it's a company, I guess, trying to use this loophole of being a nonprofit, raising a bunch of money, right? So it could be any industry, but I'm mainly talking about tech.
Okay. Yeah,
Um,
so they've been a nonprofit. I think that part of the sort of concern for a lot of people is that OpenAI started out as a nonprofit. All of a sudden, they started raising money as a for-profit company. Microsoft has been a big investor. They've had multiple rounds of investment from VCs. Their latest round, they raised money at a $500 billion valuation. And obviously, all these investors are investing with the expectation of profits, and they're expecting them to maybe someday become a publicly traded company. All of that is not possible if you're a nonprofit. So this conversion to a for-profit entity was expected by many, and like lots of people, including Microsoft, have been putting billions of dollars behind it. So um, yeah, I don't know what kind of precedent this sets for nonprofits, but it is definitely very, very interesting. Now, one of the things that I found interesting is that they're becoming a for-profit but a public benefit corporation, which is slightly different than a typical corporation in that their charter actually has to have some kind of public benefit. And OpenAI has essentially said they're sort of researching AGI, the artificial general intelligence, for the benefit of humanity. So they are actually integrating that into their charter, which is pretty cool. Um, and then they're making sure that it benefits everyone. And then they're still going to have a nonprofit arm, which is going to own roughly 26% of the for-profit entity, and still sort of like controls it in some way, maybe through its board. But that 26% is going to make the nonprofit arm worth roughly 120 something billion dollars, which is going to be one of the largest nonprofits in the world. Um, so that is also very fascinating, and how they use that money. Or, I mean, it's not cash that they can use, but as the company gets bigger, it might even become a bigger pile of investments. You would expect some percentage of that to be spent on an annual basis as they can like sell stock in the public company and use that money. So that's fascinating. Uh,
one other piece
basically, yeah, go
talking
ahead.
about the public benefit side of things, the way the product is already set up, it pretty much acts like a public benefit where you don't even need an account to use it. You could just go to the website and ask it anything. Um, you don't need to pay, you don't need to log in. They even have a phone number. If you don't even use the internet, they have a phone number you can call 1-800 chat GPT
Yeah,
and use it that way
yeah.
as well. So they make it very accessible.
I just realized I have completely failed on the audio side of things. And Adrian, I don't know if you can tell my audio is better or worse than before, but I'm fixing that right now. So I'm just
We're doing it
connecting my.
live.
Um,
It's all good.
Let me real quick change my audio external microphone. Okay, I don't know if that sounds any better or not, but hopefully. if anybody was sort of
That sounds
listening
better.
on podcast side, it's slightly better. All right. So the other thing that this does, by the way, is it makes Microsoft officially own a pretty significant chunk that's worth, again, roughly $130 billion at the last valuation. Microsoft's shares went up as a result of that, like owning a $130 billion chunk of the fastest growing company in history is a pretty big deal. And there's, good chance OpenAI is going to become $1 trillion or even larger company someday. So Microsoft owning 27% of that is pretty cool. And then 47% of the company, the remaining 47%, is owned by other investors and OpenAI employees and various different people. So so that change is super fascinating. One thing about OpenAI that concerns me, and this is sort of like this might lead to another subject that we have on our agenda, which is the AI bubble, right? The way in which, okay, so as part of this, by the way, it's become apparent that OpenAI is expected to have somewhere in the neighborhood of 12 or 13 billion dollars of revenue this year, and it's like almost 3 times last year. So the growth rate is also astronomical, right? Going from like 4 billion to 12 billion. But essentially, it's a $12 billion revenue run rate company that has these enormous commitments with Microsoft, for example, for $250 billion, with NVIDIA for $100 billion, with AMD for $100 billion, with Oracle for like $300 billion, with Broadcom for another like $60 billion or something. It has over $800 billion of purchase commitments with other companies over the next few years, and like the duration of the next few years is sort of like a little bit unknown, but it's somewhere in the neighborhood of like 5 years ish. So to spend 800 billion over the next 5 years, I don't know what kind of growth curve you need to have, but that just seems like a lot of spending commitments that these other companies are sort of like starting to count on, and I'm not sure if it can spend that kind of money. And I don't know if you've had any sort of thoughts about that. And is this where we sort of start hitting the wall in terms of the AI bubble bursting to some degree?
Yeah.
Or at least like maybe getting adjusted to reality.
Yeah, it's so hard to know. It's hard to know. Obviously, markets are always going to correct. The difference between this and the dot-com bubble, in my opinion, is there's more value here
Oh,
where the cost,
100%.
right? So like
100%.
there are differences, but that doesn't mean there's not a bubble. And it's also hard to know what's
Also,
going to, yeah.
yeah, just like comparison to the .com. I don't think it's comparable. Like almost nothing has been comparable to the .com bubble, because a lot of that was also like companies and money being spent by VCs on companies that had no revenue. And this is a lot of companies that actually have revenue spending the money. So there's definitely differences there. But I'm
Yeah,
sorry, continue.
I think the reason why people jump to that comparison is just because it's two potential tech bubbles, even
Right.
though a lot of the underlying reasoning and like what's going on is very different.
Yeah.
Yeah, the other point I was going to say is like you if it is a bubble, you also don't necessarily know what's going to cause it to pop, because it could be an external factor, that
Yep.
brings the house of cards down. Not saying that that it is a bubble. Again, I don't know.
Yeah.
But I'm also and because I don't know, as an investor, I'm not that in the AI stuff.
Yeah.
So
You know what's funny is that as an investor, if OpenAI was a public company, and let's say it was traded at roughly a $500 billion valuation, I don't actually think that that is out of line for how fast OpenAI is growing, how much reach it has with like now over 800 million daily active users and 12 billion of revenue, growing at like 300% annualized growth rate. Um, I might be an investor in a publicly traded OpenAI at a $500 billion valuation. But what concerns me is the spend commitments that they're making with these other companies, and these other companies expecting that revenue to come. And I don't know what kind of commitments are those loose commitments, like, oh, we expect to spend 100 billion here, 100 billion there, 300 billion there, or is it like contractual commitments? And if it's contractual, that would be very concerning. But if it's sort of like a loose commitment, yeah, Oracle, we expect to use $300 billion worth of your data center facilities over the next 5 years or whatever. That would be fine, but contractual commitments would not be fine.
Well, you know, my next follow-up question has to be, if you're interested in potentially owning OpenAI if they were a public company, there is a public company that owns 27% of OpenAI.
Microsoft.
So any interest in investing in Microsoft then?
Yeah, so no, and I'll tell you why. Because that got priced into Microsoft stock pretty early on when they announced that they were like investing in OpenAI. And if we go to Microsoft, and they may have already reported, by the way.
I think they did.
Let me see. Okay. Okay. There. No. Is it Q1? Yeah, October 29th. So yeah, look at this. So 12% beat on EPS, 3% on revenue beat. Wow, this is pretty incredible.
And they're down like almost 3% after hours.
Are they really? Why is that? That's surprising. So people were expecting a bigger beat even than the beat that they had. So here's the reason I don't own Microsoft. It's because of this 37 PE for a company that's growing at roughly 15%. So of the big companies, Meta, Microsoft, Google, I think Google and Meta are in far better shape than Microsoft. And I think, by the way, both of those companies have better talent. And in Meta's case, it's also founder-led. So I like, between those three companies, I like Meta the most. I like Google the second most because it has a lower PE and much more tech at Google than Microsoft. And they have their own tech as opposed to owning a piece of another company's tech. You know, I consider Microsoft like third place from those three companies in terms of the tech and talent side of things. But speaking of the other two, let's see how they did. So Google just reported as well. Holy macro, 8% beat. Look at this. This is why I like Google better. 8% beat on top line. They broke $100 billion in a single quarter of revenue, 102 billion.
And they're up 3.8% after hours.
Okay, the expected was 94 billion. How is that even possible? They had an extra 8 billion than the estimate. That is mind-blowing. And then their EPS was beat by 26%, $2.87 compared to $2.27. Looking at
for Google, that's like finding some loose change in the couch.
Yeah, I don't know if you multiply it by their market, the number of shares that they have, if that's some loose change. But holy macro, that is unbelievable growth. And yeah, up 4% after hours now, and it might go up even higher. The numbers are absolutely incredible. Okay, how did Meta do? Let's go to Meta.
Meta was also positive, but they're down after hours 6%.
Okay. Oh wow. Let's see here. Okay. I wonder, do we have other estimates as to what analysts were expecting? Because we're seeing like all beats everywhere, but the market reaction is not nearly what you would expect.
Well, for Meta, the one thing that we could point to potentially is the neutral guidance as opposed to positive guidance.
Okay.
That might have an effect. I don't know.
Interesting. Meta breaking $50 billion of revenue. I think that's the first time. 51 billion, I think so, versus 48 billion last year.
Yep.
Wow. And then beating on EPS by 8.8%, $7.25. You know, this might be time to pick up some more Meta if it's down 6%. Holy cow. Yeah, at $700, it becomes attractive again, right? Like the PE of Meta, for example, is 26. This is part of the reason I like Meta better than Microsoft, for example. Um, yeah,
See,
that is
it's
super
funny, it being
fascinating.
the first thing I look at whenever a company's down is when was the last time they were at this price?
Yeah,
And Meta was down to $705 on October 10th. So if you want to invest in Meta as if it were October 10th,
yeah,
now's the time. But that's how I like to look at it.
yeah, yeah. And in October, they were down for no reason, too, by the way. Like, so it's kind of interesting. I think it's part of the reason that Meta has been hovering around the $700 price tag is because of the announcements of the amounts of money that they were spending on acquiring AI talent with $100 million signing bonuses. And some of the concern became, uh-oh, is this a similar sort of overspending by Meta in the same way that they overspent on AR, VR? Um, and I think investors have been super concerned about that. Now, when you have this kind of profits, though, it's hard to imagine why investors would remain concerned when you're pumping out $7.25 of profits per quarter, $28 on an annual basis. So this makes their PE relatively inexpensive, and if it's down 6% today, their PE is going to go down even further. So, um, yeah, Meta might be one of those companies that is like on my list of the large cap, like, or mega cap, I should say, the mega caps that are like over $1 trillion companies. Which one do I think has the highest probability of uh, bigger returns? Meta definitely falls into that bucket. What are your thoughts?
In regards to the
Not-
Mag 7,
yeah, so you're not in any of them, right?
no, I'm
If
I'm
I'm
in
not
more
mistaken.
than you. I'm in more than you.
Oh,
Uh,
wait, you have Amazon and
I have I have Amazon and Tesla.
okay, so two
Yeah.
two.
And I'm in Google and I'm in Meta.
Oh, okay. I didn't
Yeah.
realize that. Okay, so that's
Yeah.
I don't know why I had completely forgotten about
Yeah,
that.
no,
But
I definitely like to invest in, like, the bigger players more than you do, I think. Um,
yeah, because I see their 10x opportunity as having sort of been in the past as opposed to the future. Like it
right,
would
yeah,
seem like much more difficult for a company like Apple, Nvidia, Microsoft, Google, et cetera, to 10x over the next 10 years than, let's say, a Robinhood or a Rocket Lab or a Rivian.
totally. Yeah,
Um,
I like to have a mix of the 2, like, I feel like they're a bit more stability. Not that they're stable by any means, right? Like, these companies
yeah,
could like, Meta's down 6%. I
that's
don't
right.
think that's very stable, but I think they drive the whole market, so I like to invest in them, and they're not going anywhere either, so that they're
Right.
fairly safe in that front, right? Like, they're gonna be around in 10 years.
That's right.
Um,
That's right.
so in regards to, like, my favorite Mag 7 play, well, my biggest investment is in Tesla, which is 1.64% in
Okay.
regards to the 4 that I hold. I wouldn't necessarily say that aligns with how I see Tesla versus the others. I probably am with you where I'm more excited about Meta and Google and Amazon. I don't know. I don't have a strong opinion. I kind of view them all under the same lens that
Yeah.
they're all large, strong businesses. But I do bias towards the ones that seem to be doing well with AI currently, because that's where the puck is kinda going right now.
And why don't you own Microsoft out of curiosity? Because we neither one of us owns Microsoft, and I wonder if your
Yeah, I
reasons
don't own
are
Microsoft and I don't own Apple, or NVIDIA. So, when typically, if I'm entering into a position, I usually have a price target set where I'm gonna enter, just so I feel like I'm getting a good deal. Sometimes I'll buy, like, because I'm very comfortable missing an opportunity, right? Like, if it
right.
never unless if I feel like something special where I need to get in now, I'll wait and take my time to enter a position.
Yeah.
And Microsoft never hit any price target I set. It just, kept growing.
You know
So,
what's funny is that you just touched on something that I think is so important as an investor, becoming comfortable with missing opportunities.
oh
Just
yeah,
that
opportunity cost
concept,
will kill you.
that or FOMO will kill you.
Right, right.
Yeah, yeah. Because there's so many people whose portfolios I see have like 20, 30, 40, 50 stocks in them, and they're investing themselves. And I have had family members that have been in this boat, and I ask, like I'll name, like two of my sisters. I knew there's portfolios, and I'm like, do you even know what these companies do? And oftentimes it's like, no, I heard about them here or here, or this friend or whatever. And it's so difficult to know a company if you own 30 stocks or 40 stocks or 50 stocks. And fear of missing out is part of what drives it. The other driver of owning a bunch of names like that is wanting diversification, which
Right.
which is like a guaranteed way to make mediocre returns because you know um, diversification, and this is not investment advice in my opinion, but diversification is guaranteed to limit your returns, essentially is what it comes down to. So um,
And it doesn't
fewer.
necessarily limit risk, right? Like
That's
if
right.
you're invested in one stock, yeah, it's going to help you with risk. But like all of these stock, like if the market's crashing, your portfolio is not going to do well, regardless if you hold 10 positions, 20 positions, 30 positions.
That's right. But just to be fair, the more positions, the probably less the bounce will be, the
Yeah.
down portion will be. Um, but yeah, absolutely, it doesn't eliminate the risk of market being down, but it certainly eliminates the possibility of having upsized returns or outsized returns that because if you spread your portfolio among 50 different stocks at 2% apiece, if one of them 10x's, you have basically had 8% return on your entire portfolio, assuming all else is equal, right? Whereas if
Right.
you're invested in 5 things and one of them 10x's, you've practically doubled your portfolio. So, or more than doubled your portfolio. So, uh,
Yeah.
anyway,
Going back to the FOMO piece, I think something that helps with that is just being, you need to have a conviction in your positions. You also have to have conviction in your strategy. Um,
right.
and like, I missed out on Microsoft and Apple going up, but I bought Amazon. My average cost was $106 a share. It's now at 230. With Google, I bought at $114 per share average, and now it's at 274. Meta was $127 a share. That's $751 now. So, you
Nice.
know, like all of that did well for me. So I don't really think too much about like, oh yeah. And I love Microsoft as a company. Um,
Yeah.
but just
And Satya has done a
with
good job as well with
absolutely.
Microsoft. So that's been
He's
nice to
probably
see.
one of the best non-founder CEOs of these large companies I've seen.
100%. 100%. I am in total agreement there. Um, okay, we had a few other companies that have reported as well. Chipotle was supposed to report today, and where are their earnings? Let's see here. So it looks like they missed on top line by just 0.6%. So not a big miss. 3 billion expected was 3 billion, 3.02 billion. And then a beat on EPS of 1 cent, which is 3.5%. And their stock is mixed results in after hours. Looks like it's up 0.5% or so. So that's Chipotle. What's Starbucks doing? Ooh, Starbucks looks like stock is up 1.2% after hours. What was their earnings? Revenue beat of 2.3%, EPS miss of 5.4%. So mixed results there. And then Mercado Libre. Look at this Mercado Libre revenue graph, growth
It's
graph.
crazy.
This is incredible. Um, beat on revenue 2.5%, miss on EPS 11% miss
Big miss
on
there.
EPS. Yeah. And then their stock is down 1.2% after hours. Yeah. So what has there been any sort of like major surprises or anything for you this earnings season so far?
I mean, not in regards uh, into the earnings, but for the news yesterday, PayPal announced a big deal with OpenAI where they were going to
Oh,
be like I don't know if you saw this, the payment provider for like, if you're doing something within OpenAI and you're
yeah.
paying, it's going to go through PayPal.
Okay.
And PayPal reported yesterday they beat on both revenue and EPS. Uh,
Y-
revenue they beat
yes.
2.14%, and EPS they beat 11.67%. They also had positive guidance and positive move of roughly 4% after earnings. Zoom
Which they
in.
have given up.
Yes, they very much gave up today. They are down 4.57%. And this is the story of PayPal because I used to be an investor in
So
PayPal.
frustrating.
And this is one of the ones where I think it's a great business. They have great leadership, and the stock has just been flat. It's been ranging, but it's been flat. And I, to me, this is one where like if you're patient, it will pay off,
Yeah.
unintended.
Yeah.
But I just had higher conviction in some other stuff. I had to exit, and it still hasn't really moved since I left, but I expect it to. Not investment
So
advice.
yeah, looking at PayPal, look at the sort of revenue, 32 billion is trading at 65 billion market cap. That's a price sales ratio of 2.0 for a tech
Yeah.
company. That's pretty amazing. And then a PE of 13, again for a tech company, that's pretty amazing. They
And it's a
still have.
prominent tech company too, right? Like
That's right.
everyone uses Venmo. They own Venmo, you know?
Yeah. Yeah. I mean, they have a ton of tech, and the expectation is that they're going to continue to use these products, or the markets are going to continue to use these products. The problem with PayPal, and this is the only reason I don't own them, but this is the type of company that would totally be up my radar in that, like, it's a
Mhm.
very inexpensive company. But the reason I haven't pulled the trigger on owning PayPal is one reason. What do you think that might be?
Not founder led, if I had
Yep.
to guess. Yeah.
Yeah. Yeah. And
But I
I already
passed.
have and like it's been a good thing that I have not owned them. I haven't like had any regrets there. And the only
Yeah, they
non-founder
did get
led
new
company.
leadership though, and I think the new leadership is better than the old from my
Yeah.
perspective. But still not found to your
pro-
point, still not founder led. I get it.
yeah. Yeah. And I don't think it's from inside. So that person probably does not have a lot of, like, not the same way as like Satya raising from inside of Microsoft,
Sure.
as an engineer, having been there for like 30 years or whatever. It's a little bit different. Same thing with Sundar at Google. When you raise somebody from the inside to CEO position, at least even if they're not founder led, they have some clout inside the company because people have grown up having huge amount of respect for them, and they have a follower base, if you will. Founder is better because they can do more things, but
Right.
internal person is better, second best if you don't have the founder, right? So, but
Yeah.
in PayPal's case, they brought somebody external, if I'm not mistaken.
I
Um,
believe they did, yeah.
yeah.
Another company that reported yesterday was SoFi,
Oh yeah,
where
how did they do?
so really well. They beat EPS 37% and revenue 6%, and then positive move after earnings of 5.5%.
Wow,
And they
look at
were
that revenue
down
growth too on
2.4% today.
SoFi. SoFi is basically like Robinhood. Is a lot of
So
ways like
this
Robinhood.
this was gonna be my question is like if I think of a company that is similar to Robinhood, it's SoFi, but obviously two very different stories of how they got to where they are, where Robinhood started with investments and SoFi started with
Banking.
lending. And but they're both trying to get to the same spot of just being the one place where you can go for your entire financial needs. So
Does
what are your
SoFi
thoughts on
also
SoFi?
does SoFi
Yep.
also offer brokerage services now, or
I
not
believe
yet?
I believe they started doing that.
Oh, really?
I don't know if they
When did it?
partnered I don't know if they partnered with someone to do that or not.
Okay.
But yeah,
Yeah. So the time that I looked at SoFi was when their stock was like, I don't know, way cheaper than it is today. It was like in the single digits. I want to say like maybe $7 or $8 a share, a couple years ago, and I thought that they were very much undervalued and had tremendous potential. And there's like people like Brad who were big proponents of SoFi, so I
stock
respected their
market nerd.
opinion. So that's right, stock market nerd. And I started actually looking into SoFi back then, and of course, I like becoming a customer of a product if I can, or a company if I can. So I did, and I had a terrible experience as a customer, and therefore I passed on them and doubled down on Robinhood as my bet. And of course, Robinhood has done much better than SoFi, so I haven't regretted that decision, because to me, I would have probably split my money between the two, as opposed to just going
Do you know,
in
is
on
SoFi
Robinhood.
founder led?
Actually, I don't know. I did not look that up at the time.
Because if they're
Uh,
not, or if they are, Vlad is definitely a more prominent founder than SoFi's founder, from what I know.
right, right. Yeah, I think they are founder led, but I'm not 100% sure. Um,
Gotcha.
but yeah, SoFi has done really well. Oh, there's another thing that I
Oh,
was not
Adrian said
crazy.
not founder led in the chat.
Oh, okay.
There you
Yeah,
go. That's
good. Oh,
another hit
thank you.
against them.
Hey, look at that. We have research happening while we're going on.
Our researcher on staff.
Perfect. But one other thing I didn't like about SoFi is that the lending exposure is pretty tremendous, is pretty high. So, like, if, for example, you have huge amount of defaults in lending, um, Robinhood is not nearly as exposed as a company like SoFi is, with a ton of outstanding
Does
loans. But
does Robinhood offer like student loans
no.
at all or
In
no?
fact,
Okay.
the only kind of lending that they have is margin on your brokerage account, and margin is secured against your brokerage account. So they will, brokerages are famous for just draining people's accounts if they hit
Yes.
margin calls. So,
And they also
um,
have credit cards now if you want to count that as,
oh yeah,
some level of lending.
that's right, and that's actually part of the reason why they are slow rolling their credit card, is because they don't want to have a huge amount of exposure on the lending side with credit cards, and they don't know yet what the sort of statistics on that are going to be, how many defaults they're going to have, et cetera. So they're sort of, they have a couple million people in the queue for their credit card, but they're not deploying it as fast, largely because they don't want to have that extra exposure.
That's interesting because if it were me, and obviously I'm not running Robinhood, I would approve people more quickly just to have the positive experience with the brand, but give lower credit limits where the
Well,
risk is smaller.
I think they are giving very low credit limits. I had that problem when they finally approved mine, and yeah, I think they are doing that actually to some degree. So um, yeah, and then tomorrow we have a pretty busy earnings day with Amazon, Apple, First Solar, Coinbase,
Eli
MicroStrategy,
Lilly,
Reddit. Huh?
Eli Lilly in the
Oh
morning.
yeah, Eli Lilly in the morning. That's right.
Yeah.
So many great companies. I'm looking at the after close though. Holy cow! Even Cloudflare, Roku, yeah, Twilio, Atlassian. Yeah, there's a ton of companies reporting tomorrow after hours.
Yeah, we're deep into earnings season. That's why I'm wearing my sweatshirt.
GoDaddy too. Wait, what's your sweatshirt?
No, it was a joke.
Oh, like
Like, earnings season, maybe it's cold, you need a sweatshirt. I'll shut up. It's fine.
wait, what? Why does your title just say, like something normal rather than some kind of?
I couldn't think of anything funny, but I did change the font to be Halloween themed. So that counts for something.
Okay, spooky. Um,
I guess I could have done a Halloween thing. Okay, I'll
yeah.
change it.
I like the little candy cane Easter eggs that you've built into the Earnings Hub
Candy
logo as
corn.
well, or candy corn rather. Not candy
Yeah, I
cane.
love it.
Candy cane
I
is for
love
what?
it.
Christmas?
Yeah, Christmas. I love it because it's set on a timer. So like when it pops up, I'm also surprised.
Oh, nice.
Yeah.
I feel like you should have the tooltip also say like Happy Halloween or something like Earnings Hub,
Oh yeah,
from Earnings Hub. That would be
totally.
fun. Okay, what else do we have to talk about?
So let's see.
Oh,
Oh,
Jerome Powell lowered interest rates today.
you
Uh,
want to talk about FOMC? I thought you didn't care about that.
I don't, but I just wanted to say, like, I don't care about it.
You want to acknowledge it?
But it did happen.
Yeah,
Yeah, so
they
quarter point.
lowered by a quarter of a percent to I think 4% flat.
Okay.
And this was to what everyone was expecting. So I don't think the market had much of a reaction. The biggest news in from my perspective is that they said they are going to end quantitative tightening on December 1st.
And
So I
tell us
think
what
that's
quantitative tightening
QT.
means.
I just
Yeah.
call it QT. It's easier.
Yeah.
It's like the Fed adjusting their balance sheet. So it's are they, putting money into the system or taking money out of the system. Um, and they are no longer taking money out of the system.
They're going
So
to start
in
putting money
theory,
into the system.
yeah, in theory, it raises the price of things, which is good for like stocks, but not good for inflation. But it's helpful for if they have concerns over unemployment rate, right? Because this means that money or this means that companies could more easily get funding and hire more employees, things like that,
Okay. So
or loans,
availability
not
of like
necessarily funding.
loans and things like that is
Yeah,
what's going to be higher for companies, businesses.
it'll be easier. Yeah,
Okay.
in theory.
All right. Moving on
And
from
I'm not an
FOMs.
expert on this. This is just some normal guy explaining it.
Okay. What else do we have to talk about?
So I did have another question for you in regards to your portfolio. How do you think about rebalancing your portfolio? Like, I know some people, like every quarter, they'll kind of adjust to like certain percentages, but how do you go about doing that?
Huh, that's a great question. I don't have a formulaic way of doing it. To be honest, it's just sort of like if I feel that something is starting to get a little bit overvalued or higher value than a higher price than I would have expected, then then that's when I start to trim that position. So you've seen me do that on Robinhood. You've seen me do that on Rocket Lab, despite me still loving those companies and thinking that they have a bright future and they're going to continue to grow rapidly. But I've been trimming those positions as opposed to adding them. A lot of people do the reverse, meaning as the company's stock prices start to go up, they start to buy with the momentum, expecting the company, prices to continue to rise. But to me, they become higher risk because I've already bought a ton when they were low priced, right? Like that's what I'm doing, accumulating Rivian and Bumble, for example, right now.
Mhm.
Um, so, when other people are going to be super excited about Rivian, hopefully, assuming the price goes up at $50 or $60 or $80 a share, I'm going to be like, okay, this is now where I expected it to be, a couple years from now, and I'll be unloading it as opposed to loading up more. So, or at least trimming my position somewhat. So that's the way in which I do it. I don't have a strict formula base. Now, in both Robinhood and Rocket Labs case, um, both of them have reached almost 30% of my portfolio at one point or another. In some cases, it was even higher than 30%, and that definitely makes me nervous when one stock is. I'm not a very diversified. I'm not pro diversification in general. So um, if okay, let me take a step back. I'm very uh, focused and highly concentrated investor in general. So let me set the stage. If I was if I had an income and the amount of money I was investing was relative to my income was similar or let's say less, then I would probably be very concentrated in 2, maybe 3 names, even more concentrated than now. And I'd probably have a much smaller cash position than I do now because my main income was coming from someplace else, and um, my living expenses were being paid from my main income. So therefore, my investments would be all about how can I make my investments become uh, go up rapidly in such a way that actually has a meaningful impact on my life, right? That's the way I would be looking at my investments. Now, in my current position, my investments are the vast majority of my net worth, and I don't have any other income. Therefore, I'm more diversified, despite the fact that I'm not very diversified, than I would be otherwise, right? So
Right.
uh, I'm diversified in like 6 or 7 things as opposed to 2 or 3 things. And when one of those 6 or 7 things becomes more than 30% of my portfolio, then that definitely makes me nervous. So
Have you ever thought about adding another portfolio on Savvy Trader to track what you would be doing if you were in higher risk mode?
no, I have not. I have not done that. I figure it's probably more important for me to share exactly what I have as opposed to a hypothetical,
Mm.
because there's plenty of other savvy trader users that I want to do that kind of stuff. And savvy trader, the reason I use savvy trader personally is because A, I wanted to share my portfolio with family and friends, and B, I want to make sure I dog food our own product, and recognize the issues with it, right? And how to improve it and that sort of thing. But it's not about me sharing a ton of investment advice, or I don't give investment advice, but I don't want it to also appear that way. And and, uh, and it has slowly inched in that direction to where like I'm sharing more and more because like people are asking me to share more and more of what I'm doing and what I'm thinking and my opinions around stuff. Um,
Right.
but yeah, that seems
Uh,
like a lot of extra work that I don't want.
Makes sense. Okay, I think we should move into some listener questions,
Let's
Adrian.
do it.
Okay, we have we'll go first with the companies that we've talked about before. We have a question about Bumble being taken private.
Ooh, okay. So has somebody credible actually said this? If they have, I do not know about it. I know Grinder founders were trying to take Grinder private, and in the case of Grinder, let's pull up Grinder real quick. Let me. Oops. It's GRND. This is a company that is traded. The current market cap of Grinder is 2.9 billion, and it has 385 million. This is how like messed up the market cap of Bumble is, and I'm going to get to that in just a second. But um, there's talk of taking Grinder public by the founders, or private rather, as a public company. So if they do take it private, it would have to be north of 2.9 billion, which means the founders think that Grinder is worth even more than 2.9, let's say $3 billion. And Grinder has 385 million in revenue. So that's these numbers that I'm looking at here. Its trailing 12-month revenue is 385 million. And its market cap is 2.9 billion, right? So that's a price sales ratio of 7.4, and it's not even profitable yet. Meaning, like it's negative EPS. Now, this could be because of one-time charges or write-downs, similar to why Bumble isn't profitable. But I haven't looked at that. But its profit margin capability is going to be very similar to Bumble because they're in the same profile of business. They don't have way lower margins or like gross margins and that sort of thing. And the market is valuing them at 7.4. And the founders are thinking 7.4 is not enough. We want to take it private, buy the whole company, and then do our own thing, and then maybe like later become public again. Now, when you compare this to Bumble, right? Bumble has a $1 billion, almost 3 times the revenue of Grindr. Okay, almost 3 times the revenue of Grindr. But the market cap of Bumble is just 576 million, less than 1/5 of the market cap of Grindr. How ridiculous is that? Is that sort of like comparison? So if somebody was going to take Bumble private, they better be giving more than double its current stock price or triple its current stock price, because as a shareholder, I would not be happy if they were trying to take Bumble private at, let's say, $6 or $7 or even $8 a share, because I think this company is worth so much more than that, just based on these sort of ratios alone. Sorry, what did you say?
No, I was agreeing with you. There's way more potential with Bumble than a 2 or 3x. Not investment advice.
Yeah.
Can you show the price chart comparison between Grindr and Bumble? I'm just curious to see how these stocks move.
So on the price chart, let's Grindr. Let me zoom out a little bit so you can see.
Yeah, and go to maybe a larger time frame because it's just one day.
Let's do year to date. They've been year to date. They're almost similar, actually. Bumble or Grindr at one point was up 74% in the past year, while Bumble was down, and Grindr has lost a lot of its increase in recent months, which is probably why there's been talk of going.
I will say the price chart isn't as correlated as I would have thought it would be.
Yeah, no, but Bumble has basically gotten a huge negative rap, and like it's sort of unexplained as to why it's trading at 0.6 times revenue. But at some point, I feel like the market is going to discover this discrepancy and correct for it, and that's the reason I'm in Bumble, right? And I love the fact that the founder is back and like focused on all the right things from my perspective.
Do you think there's like a specific catalyst for like a Bumble turnaround, or do you think they really don't even have to do anything? It's just the market needs to eventually recognize it.
Well, they are, so they're a profitable company, but their EPS doesn't show it because of the one-time write-downs, right? Like, for example, last quarter they generated 60 million in cash, but had a $400 million write-down of goodwill. So they ended up showing $2 and some cents, some change of EPS losses, but the losses were not real. They were write-down losses, which does not actually impact their revenue or profits or cash position. If they continue to show profitability, let's say that this next quarter, or this in Q3, which they're going to report on in a couple of weeks, they showed that they added another 60 million. Right. And maybe, I don't know if they're going to have write down or not, but if they do, hopefully they learned the lesson from last quarter and they actually explain that, hey, this is a one-time event, but if we didn't have this, we would have actually had 40 whatever cents of profit, because that's the reality of the situation. Then I think the market has to start recognizing that, wait a second, when you multiply their profits times 4 for annual basis, this company is making like $1.50, almost $2 of profits per year, and it's trading at like $6 a share. Like, how is that? How is that even justifiable? So no, I don't think it needs to do anything other than just continue executing and being profitable. Now, if it also does one other thing, which is like have its revenue turn around and start increasing, if Whitney is capable of doing that, watch out, because all bets are off. A rapidly growing tech company in its position, let's say it introduces a new product that is popular and starts to take off and adds another sort of like revenue stream, Bumble could easily, again, opinion, easily go up like 10x from here, and it would just barely be in the same realm of like Grindr, for example, in terms of its its price sales ratio. So yeah, I think that that Bumble is getting a bad rap for not justifiable reasons.
Got it. Adrian, what's next?
We have a couple Rivian questions, which I know Hamid will love. We
Let's do
have
it.
we have user Bull Bear. He's the one asking. He or she is the one asking the questions. Why do you think that RJ and the CFO keep selling their shares?
Well, it's not uncommon for founders or company employees to sell stock. That's just a normal part of, like, that's what they do. Like, Elon sold 40-50 billion dollars worth of stock of Tesla a few years ago. That's just not uncommon. In fact, Whitney also sold some of her Bumble shares as well. Most of employees, including founders, entire wealth or net worth comes from the stock of the companies that they founded or work for, and therefore the only thing they do is sell in general. Now, sometimes they buy, which is a great indicator that, hey, this person also believes in the company. But usually they're not buying unless they're going on their second or third company where they actually have some wealth that they can use to purchase stock. So selling of stock is not a huge concern. Obviously, you prefer not to see it. Don't get me wrong. Like, it doesn't make me excited that RJ or anybody else is selling some stock, but it also doesn't create this enormous amount of concern for me. So
yeah, and can sometimes cause a buying opportunity if it brings the price down and you still believe in the stock.
That's right.
What's next?
We ready for another Rivian?
Go for it.
Same users wonder. This is for Hamid. What do you think the revenue will be for 2026 if they manage to sell all their vehicles?
So 2026, they're probably not going to make a lot of R2, their next generation low cost vehicle. But we can throw out some sort of very speculative numbers. Let's say they make and sell 50,000 R2s at a roughly $50,000 per vehicle price point. That would translate to roughly $2.5 billion of additional revenue from their current revenue run rate. Their current revenue run rate is about $5.5 billion. So you add $2.5 billion to that, you could easily see a 40%, 45, maybe 50% if they're lucky, revenue increase in 2026 compared to 2025. The real increase will happen in 2027 and beyond, because in 2027, the expectation is that they would be at the full scale, high volume of close to 200,000 R2s. And 200,000 R2s would add roughly $10 billion of revenue to their current revenue run rate of approximately 5.5. So, 2027 revenues could be as much as like 15.5 billion. So, going from about 5.5 to maybe 8 to potentially 14 or 15 billion would be incredibly impressive. And these are just like rough back of the napkin type of numbers, estimates, like literally doing it on the fly. So I haven't actually sat down and speculate or tried to calculate these details, but yeah.
I think that's it for today.
All right.
Yeah.
We're going to
We'll
end it
wrap
there?
it up. That's what I was going to say.
Awesome. Well, good stuff. Thanks,
we
Dustin.
appreciate everyone listening. We appreciate the comments, the likes, the 5 stars. We appreciate it all.
Yeah. Leave comments on the YouTube videos. And if you're listening to this on podcast, by the way, definitely leave a comment and rating on the podcast in Apple Podcast or Spotify, wherever you're listening to it. We read all the comments and we love it. So thank you very much, everybody. Appreciate it.